Chevron oil, ticker symbol CVX. In a few moments for the Chevron oil earnings. I have been talking to oil barons this morning, learning a bit more about crypto as well in this space. You wouldn't expect that, would you? Markets are pumping, making loads of money, taking profits. Where do we go next? Join me for the Chevron earnings right after this. If you are watching later, you can skip through all of this stuff. What an amazing day today. We're talking about making loads of money. It should be illegal how much money we've made today, and we're taking profits. We're going safe now. Recession round the corner. Inflation coming back all around the world. So what's happening now? We've got the Chevron earnings oil. Chevron earnings, I've been talking to some oil men this morning, learning a bit about crypto as well. Very interesting. Nice little pump this morning on crypto. Well, kind of. Not that massive. In fact, it's gone sideways really for ages. But nice little pump. I took some money this morning. I sold nearly another $200,000 worth of stock this morning. And now for the first time since about October, back in treasury bills, protecting all those gains, protecting all those profits, and hardly paid any tax on it because I did my Was I muted the entire time? Was I muted the entire time? Tell me I wasn't muted the entire time. Just then, right? Okay, I'm not muted now. Oh dear, that was embarrassing, wasn't it? Okay, we good? We good? Yes. I'm thinking fine now. Right, so let's come back to that. Sorry about that. So, muted when you move to those anime. Thank you very much, Renee Zanon. Appreciate it. So, what are we talking about this morning? Well, it's Chevron oil this morning. Thank you very much for joining me for this important morning because oil tells you everything. And as expected, hardly anyone's watching. Only the real investors are here this morning learning. I got messages this morning from crypto bros. What do the oil men know about stuff? Nothing at all. They're all stupid. They're all idiots. What do they know? Absolutely. You're dead right. What do they know? Well, I've been talking to some oil barons this morning, learning about some crypto moves. And we've seen some moves in the market this morning. I sold nearly 200 grand, shared it everywhere, so you all know all about it. Oh, I think we might have had...
I can't believe
I've
this.
got a new member.
And Frank Lenspool 714 has become a member.
We've got a new member here this morning. Franklin, is that Franklin? Good morning to you. Where are you from? We'd love to get to know you. Welcome to the Lucasades. Here you now get members-only videos, members-only live streams. You can chat to me in the live chat when it's members only. There are members events as well. You can also comment to any of my videos and I'll reply to you. So there you go. You get lots of perks and benefits as being a member. If you ever go Electrum, you get all of the analysis videos as well and all the live events that I do to do that. You can also select earnings calls, earnings reviews, all that other good stuff. But thank you very much. And my trades 24/7. Okay, so we've got just 15 minutes before the Chevron earnings. I'm covering it. I know only 60 people are watching. Most people don't give a damn about it, but this is how you make money. And I learned this morning, so I'd sold about 200 grand's worth of stock this morning, now back heavily into treasury bills. We've got some gifts from 1970 Buckley. You can now win a membership. If you are subscribing and liking this video live right now, you can win a membership.
I can't believe this.
Jose has just won a membership. Good morning to you. Congratulations. You've just won a membership. 1970 Buckley just paid for it. It's not free. It was paid for you by one of our most valuable, wonderful members here on the channel. So please at least thank 1970 Buckley.
This.
And there's another one, Can't Get Right. You can always get it right here on the show. We're always winning, always beating the market. So anyway, you might want to thank 1970 Buckley. Now, if you did just get a membership, congratulations to you. If you tap the like button, you can win one. We're giving them away right now. But you've got to be engaged. You've got to be a subscriber.
I can't believe
and
this.
Mike Place just got one as well. If you do get a membership, Okay, what you can do right now, because if you do nothing, it just goes away in 30 days' time, and you won't know what the benefit was. What the hell was the bloody point? What you need to do now is you've now got a 20 or 27% discount for Electrum, our most popular membership. You could upgrade that now. There's another one. Another one. JVLS5. We're giving memberships away. At least one of our members is 1970 Buckley. Please thank her. If you win a membership, go to the homepage of the channel, go to membership on the right, upgrade, get yourself Electrum. You can try it out for a month. You can always downgrade if you want, cancel whatever you like, but you've got a free trial.
Believe this.
Bot has just got a membership as well. Tell me we haven't just given a bot. Tell me we haven't just given a bot membership. No, that's not possible. They can't. You have to be a verified member on YouTube to get a membership. Anyway, so go and upgrade your membership. You'll get all the analysis. You get basically getting a free trial with a 27% discount now. Just take advantage of it.
I can't
Don't just sit there.
this.
Another month. Happy Friday.
Yestin04 has become a member.
Hello.
Another month. Happy Friday, everyone.
Yestin Win, one of our moderators here on Discord, on YouTube and on Discord. Right, 15 minutes ago before the earnings call, I did a major move. Yesterday, was it a couple of days ago, I sold $250,000. Today, I've done another $200,000, right? I've made more money than I deserve. I 5x the market this year. You heard me interviewed yesterday from Sensei. If you've not yet seen our 60 minutes interview, hang on a minute. Let me refresh that. There we go. Chevron oil, bring it on, bring it on. Where you gone? That's not good. That's not good. Where's me Chevron oil? Yeah. There we go. That's better. And where's your mute button? You've moved it. Right, hang on, you're creating me havoc here. Chevron, I was just talking to you earlier, and now you're creating me havoc. Where's your mute button on this? You don't put a mute button in. Oh, there it is. It's a funny place to put it. Right. We'll just mute that for a minute. Chevron earnings, it doesn't look very exciting right now. It's just a plain screen. I'll come back to it in a minute. But yeah, I sold a couple 100,000. Was it $250,000 a couple of days ago? 5x the market. And now I've done another 200,000 this morning, all right? So it's all been shared on Discord and in Electrum from our pro members as it was outside normal hours, okay? On Electrum members, it's 24/7, right? Okay, so you may or may not seen this. Let me share this with you. Switch account, Martyn Lucas Music. Do I have to be on here? Oh, it's because I'm live. Bugger me. It's because I'm live. I can't show you. Well, right at the top of the channel, it's normally there. It's because I'm live now. It's not there. Because right at the top of the channel, there's a new video. It was a 60-minute interview from Sensei, and there it is, 60 minutes. Is Martyn Lucas the best investor? Well, yesterday we showed you all the numbers, and the facts are, yes, I have beaten Buffett for 3 years in a row, consistently. I have beaten every hedge fund manager and Wall Street and the S&P 500. So now I'm repositioning ahead of the market again.
At Diesel_Ada tipped $1.99 through Super Chat. Gently smash the like button. CVX going to pump. Fafo.
Thank you very much, Diesel Radar, for that. So if you've not seen this video, I've pinned it to the top. You want to go and check it out. It's our highest watch-through video ever. There's in the peak of it, it was 35 minutes watch time. That is unprecedented on YouTube. All right, average watch time on YouTube is about 2.5 to 3 minutes for long form content. 30 odd minutes. We are extremely proud of this. Senzi did a great job. So anyway, there you go. There is the must see this weekend 60 minutes video if you've not yet seen it. All right. 50 minutes, exactly 50 minutes, it gets very exciting. Sensei challenges my numbers and shows the history of how I compare to Buffett and so on. So anyway, because of all of that, you want to, a lot of that information that was in that, I have sold $250,000 a couple of days ago and another 200,000 today. So let's look at my portfolio before we come to Chevron oil. This is my portfolio. I'm up big time again today. Now, I'm actually up a lot more than that. And you're going to go, well, yeah, of course you'd say that. Show us the facts then. Well, the reality is I paid $1,000 this morning. $1,000 this morning out of my portfolio to pay my margin cost off. Now, I cleared my margin, all of it today. I had 17 grand left. I cleared it all today. So I had $980 to pay in my margin. I could have just waited until the 2nd of May tomorrow, but I thought, sod it. I want to do it because I want to show you my portfolio worst case scenario. So I'm actually up 2.5 grand today, 2,150, sorry. But I paid $900 on my margin. I wanted to just show you that. That's really, really important. Hang on a minute. Some of you, let's have a look here. Some of you are probably not believing that. You're going, I don't believe it. He's not really up that much. Show me then. Show me, you liar. Show me, you scammer. Where is it? You were charged. There we go. Can I show you without it put? Oh, without. There you go. Robin Hood. You just earned. Yeah. I can't show you without putting my bloody. Oh. I can't show you without putting my... you have to believe me. I can't show you without showing you my account number from Robinhood. It's in my notifications, but yeah, there's nothing I can do, I'm afraid. Anyway, never mind. You'll have to believe me, won't you? So anyway, I paid it off, 909. So I'm actually up 2,000, over 2 grand today. So really great today. We had this spike out of the gate because of Apple. Then it sold, and I'm already out. I spoke to the oil guys this morning, know where it's going, know where crypto's going. Crypto is starting to break out, which is wonderful. I've sold no crypto, and if you are a YouTube Electrum member and a Discord Premium member, you know that because I shared it all with you this morning, as I always do, 24/7 to you, so you know what I'm buying before and selling and so on. So I'm still all in XRP, still all in Ethereum, still all in Bitcoin, sold none, up on all of it. Fantastic. Really, really great. Now then, my S&P 500, I'm up 9%. Absolutely awesome. Fantastic. Awesome stuff. Really, really great. Up 9%. Outperforming the market. I 5x the market this year on my performance, as was shown you yesterday in the 60-minute interview. 5x the market. Why the hell am I sitting around, all right? I've beaten the market on those sort of numbers for the last 3 years consistently. So I've taken some profit. So my S&P 500 now is moved down to just 100 shares. I've got $66,000. It's 21% thereabouts of my portfolio. So I'm still all in, but with no margin at all, and my cash is also being used. Let me explain. So there's the S&P. I'm in the VUG, just $53,000, 640 shares. I'm up 17% on that, and I've only been in it a month and a half, so outperformed on that this year. So we don't want to keep going like a bloody idiot, do we? Anyway, everyone's buying like crazy. Now, Coca-Cola popped off this morning because we all know, anyone in the market who understands this stuff knows that we are going into a recession. We can't avoid it. Trump's just, the war's gone on too long. There's not an analyst on earth who doesn't think that, who doesn't tell the, if they can tell the truth. You just can't avoid it. So anyway, there we are. Coca-Cola spiked a little bit, but I said to you, I'm not buying it on the way up now. I've already bought it. This is all free shares. I've made a lot of money on this, about 160 grand profit on Coca-Cola this year. So all of my position, the whole 160, which is on my brokerage, on my Roth and my ISA in the UK, collectively 160 grand, is basically all free, all at the bottom, all making me money, don't need to sell it. But I'm not going to buy on the way up either. But I can buy it if it goes down. Because if we get a recession, everything goes down. It just goes down less. Okay? So we're not selling any of that. But where's the money gone? SGov, Treasury bills for the first time. Now, how does this work? So I've just put 115,000 in there. I cleared off the margin. Then I paid the interest payment. So we're all done there. We've got no more bills to pay. we've got 36% in treasury bills, okay? That's earning me 3.55. Now, currently, Robinhood gives you a 3.35. So I'm getting nearly a 0.25% more with treasury bills. Now, treasury bills, S-Gov, it's not going to be affected by short-term volatility. In fact, it might even go up if we get the carry trade and the market crashes because people will just go into bonds. Anyway, that doesn't matter. The point is, I can sell it 24/7, 5 days a week. Okay? So this is much better than having my money in cash. Cash is rubbish, trash, pointless. I don't have any money in cash. What the hell's the point, right? You lose money. You buy short-term treasury. This is what Warren Buffett does, okay? He might go directly to the treasury and walk in and go, "Oi, mate." For the rest of us, mere mortals, we have to buy treasury bills through an ETF that tracks it. So we buy S-Gov, S-G-O-V. You might find one in your country different, but as long as you're buying a US treasury bills, short term, not long term, short term, you can earn yourself 3.55. As long as you're earning more than you're getting on your uninvested cash, it's the way to go. If your brokerage gives you like 4%, 5%, well, there's no point doing it, is there? Just do that instead. As long as you're not locked up. The point of my short term, I can sell whenever I want, 24 hours a day, 5 days a week. So if I need money, I can get it. And despite all of that, I'm still up. We got 5 minutes to go. So all bills paid off. We should be turning the studio mega green. There we go. Mega green today. I'm up, beating, if you take out my cost today and the fact if you put back the $1,000, I'm actually beating the market today. It's because I've sold and paid the bills. Otherwise, I'd beat the market again. So anyway, we're looking good. The market went up a little bit, sold straight off again. It's a little bit worrying. It's not really worrying. It's great. It's what I'm banking on. So there we go. And it's all about protecting your money. 4 minutes ago, Chevron earnings. So where are we? I said to you, the challenge is to get to $1 million live on the show. $1 million live on the show with no options, no shorts, no crypto, nothing. Because I've made no money on crypto yet. There we go. $720,000. It's another all-time high this morning. Just done it again. And I've sold. See? I've sold. And people are going, "Oh, you sold too early." I never care about selling the top. What is the top? The top never comes. There's no such thing as the top. The top doesn't exist. 20 years from now, where's the top? Top doesn't exist. The bottom does, though. I focus on buying the bottom, and I always get the bottom. I always do. And I've shown you how to time the bottom. It was explained in our 60-minute interview with Sensei. It's pinned in the top this weekend. Go and watch all of it. If you've not watched it, you don't know where the markets are going, and everything was fact-checked by Sensei as well. So in the chat right now is your 60 minutes interview. Go and watch it this weekend, all right? So it's had an average watch time of 30 minutes. It's our best ever video. So if you want to go and watch it, now's the time. Anyway, so I've taken my profit. 3 minutes ago for Chevron earnings, we're at 720 grand. Now, I said to you I'd go from 5,000 to 1 million with no options, no shorts, no guessing, no gambling. Now, when you're looking at that, you might go, "Martyn, it's only 15% all time. What's going on?" It's because I only set this in about 2 weeks ago. This is a brand new service I've got to show you the final push to 1 million. Okay, that's why it only says 15% all time. All right, it includes all the debt, all the margin, the credit card, the whole everything. That's everything I've got and haven't got is in there. That's real. So we're protecting our money now. So if the market goes down, right, that would hardly move. Because Coca-Cola will probably go sideways. Eventually it will go down, but it'll be compensated now by the dividends, and I own no interest on it, no margin now. It'll probably hold well, and I've got 160 grand in it, so it's going to protect my portfolio. Then you've got my dividends from VU and VUG that will come in, but then I've got 115 grand in treasury bills plus the 250,000 in margin. So the first 115 grand buys the dip on the S&P. Boom. Then you have the 250,000, whatever it is, on margin. Boom, that buys the big dip. So back in margin again. Get ready, Leah. Going to do it all over again. It'll be the 4th time we've done it. All right. So anyway, there we go. We're beating the market. We're protecting our money. We're making money. And the target was, come here, hurry up. Hurry up. Come on. Bloody hell, that's slow. The target is we want to get to 1 million by the end of the decade. Well, I've now brought that forward to 2028, 2 years ahead, and it might be done sooner than that as well. Right, let's get ready. We are down on Chevron oil at the moment, so we'll turn it red. Chevron oil is 1 minute away. Have you tapped the like button yet? You're not interested in oil? No one cares, right? You're not bothered. You don't think it was worth bothering. Okay. Well, the oil men this morning told me all about crypto. But of course, the crypto bros are watching idiots down in Dallas today telling them, oh, you know that price target we told you about and we got it wrong every time? Well, it's back on again now. Send us your money. Pay $100 for a training course. Well, we give it you for free. So anyway, I'm just saying, they're not watching. They think this is pointless, even though I've beaten the market, S&P, Buffett for 3 years in a row. They're not interested. No one's interested in Chevron oil. But that's why I'm interested in it, and you are as well. Okay, let's get ready. The earnings call is about to begin. I'm listening in. Okay, I've got it on the screen. We might have some slides from the team today. Let's have a quick look. Let's mute that. Okay, just for copyright. Chevron oil, Chevron earnings around the corner. We'll learn a lot from this, so stand by. Are you ready? Chevron oil, here we go. Thank you for joining me, by the way. Appreciate it. Tap the like button if you'd like to be shown this content again and support the channel. And consider subscribing as well if you'd like to know what's really going on and consistently win. There are no places today on Discord. This is completely sold out already today. We only let a couple of people in. You can't get in today, so I'm not even talking about Discord today. You can join YouTube Electrum. Here we go.
Good morning. My name is Katie, and I will be your conference facilitator today. Welcome to Chevron's first quarter 2026 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker's remarks, there will be a question and answer session, and instructions will be given at that time. If anyone requires assistance during the conference call, please press star then 0 on your touch-tone telephone. As a reminder, this conference call is being recorded. I will now turn the conference call over to the head of investor relations of Chevron Corporation, Jeanine Wei. Please go ahead.
Thank you, Katie. Welcome to Chevron's first quarter 2026 earnings conference call and webcast. I'm Jeanine Wei, head of investor relations. Our chairman and CEO, Mike Wirth, and CFO, Eimear Bonner, are on the call with me today. We'll refer to the slides and prepared remarks that are available on Chevron's website. Before we begin, please be reminded that this presentation contains estimates, projections, and other forward-looking statements. A reconciliation of non-GAAP measures can be found in the appendix to this presentation. Please review the cautionary statement and additional information presented on slide 2. With that, now I'll turn it over to Mike.
All right. Thanks, Jeanine, and welcome to your new role. This quarter, Chevron delivered solid performance driven by disciplined execution and a resilient portfolio. Despite market volatility and heightened geopolitical tensions, our people remain focused on safely delivering the reliable energy the world needs. Our approach remains consistent: maintain capital and cost discipline, generate strong cash flow, and deliver superior shareholder returns. Chevron's fundamentals are strong. We have a world-class portfolio and upstream assets with peer-leading cash margins, carrying strong momentum into the second quarter, with U.S. production over 2 million barrels of oil equivalent per day, Gorgon and Wheatstone LNG running at full rates, TCO producing above 1 million barrels of oil equivalent per day, and U.S. refineries operating at record crude throughput. The unique combination of Chevron's industry-leading refining complexity and our diverse waterborne equity crudes from TCO, Guyana, Permian, Venezuela, and Argentina creates opportunities for value capture through integration. Our high-quality upstream and downstream portfolios delivered significant integration benefits during the quarter. We maintained strong supply into tight markets and maximized margins across products, including fuel oil, sulfur, and other secondary products, which saw significant price dislocations. We continue to optimize flows across our value chains to maintain high utilization and reliable supply into the market. In the second quarter, we expect global equity crude throughput to more than double year over year to 40%. In Asia, we anticipate over 80% refinery utilization. Moving to Venezuela, we continue to leverage our deep expertise and long-standing position to create an option for the future. 2 weeks ago, we announced an asset swap with PDVSA. The agreement increases our position in the Orinoco. Ayacucho 8 expands our continuous acreage position with PetroPR, offering operating and development synergies along with long-term growth potential and optionality. Petroindependencia is a joint venture we've been in for more than 15 years, where we've increased our equity stake to 49%. Current operations are running smoothly. We're still in debt recovery mode and expect Venezuela to continue to represent 1 to 2% of cash flow from operations. This transaction is expected to improve resource depth and integration upside, supporting potential growth into the future. Now, over to Eimear to discuss the financials.
Thanks, Mike. For the first quarter, Chevron reported earnings of $2.2 billion, or $1.11 per share. Adjusted earnings were $2.8 billion, or $1.41 per share. Included in the quarter was $360 million charge related to legal reserve. Foreign currency effects decreased earnings by $223 million. Organic CapEx was $3.9 billion in the quarter, consistent with historical CapEx trends of lighter spending in the first half of the year. Inorganic CapEx was approximately $200 million. We expect to finish within full-year capital guidance. Adjusted first quarter earnings were $440 million lower than last quarter. Adjusted upstream earnings increased due to higher realizations, lower DD&A, and favorable OPEX and tax impacts. Adjusted downstream earnings decreased primarily due to unfavorable timing effects, which were partly offset by higher refining margins. Unfavorable timing effects totaled around $3 billion for the quarter, reflecting a steep rise in commodity prices in March. The effect was evenly split between inventory valuation and mark-to-market accounting on paper derivative positions linked to physical cargoes. We anticipate approximately $1 billion of the paper positions to unwind in the second quarter, with the majority of related cargoes delivered in April. Looking forward, we would expect additional timing effects when prices are rising and further unwinds when prices are falling. Chevron generated cash flow from operations, excluding working capital, of $7.1 billion in the quarter. This includes unfavorable impacts from special items and timing effects totaling approximately $3 billion. Adjusted free cash flow was $4.1 billion for the quarter and included a $1 billion loan repayment from TCO. Share repurchases were $2.5 billion in line with guidance. Working capital was impacted by sharp commodity price increases, as well as a build in inventory. Consistent with historical trends, we expect an increase in working capital in the first half of the year and a release in the second half, the extent of which will be primarily driven by prices. Over the period, more than $5 billion in commercial paper was issued to manage liquidity and general business needs. About half has already been paid down in April, and we expect these short-term balances decline further throughout the second quarter. First quarter 2026 oil equivalent production increased by approximately 500,000 barrels per day compared to the first quarter of 2025. This reflects the integration of legacy Hess assets in addition to continued organic growth across the portfolio. The conflict in the Middle East had a limited impact on production in the quarter, with less than 5% of our portfolio located in the region. In the partition zone, we're operating at near minimum rates to manage storage. In the Eastern Mediterranean, both Tamar and Leviathan are operating at full capacity. During the quarter, we continue to execute key expansion projects, completing the offshore scope for both the Tamar optimization project and the Leviathan third gathering line. Let me close by reinforcing that despite changes in the external environment, we're executing our plan with discipline, consistent with our long-standing financial priorities. This disciplined approach gives us resilience during periods of volatility and the ability to invest and return cash to shareholders through the cycle, all while ensuring we maintain a balance sheet built for the long term. Chevron business is strong, and our 2026 guidance is unchanged. Capital spending and production outlooks are consistent with previous guidance, and we're on track to deliver our $3 to $4 billion structural cost reduction target by year-end. This consistency underpins our 2030 targets announced in November, including over 10% growth in adjusted free cash flow and earnings per share, and 3% improvement in ROCE, all at $70 Brent. These aren't aspirational goals. They're grounded in assets that are operating today, a more efficient organizational model, and continued capital discipline. I'll now hand it off to Janine.
Okay, that concludes our prepared remarks. Thank you, Mike, Eimear. As a reminder, additional guidance can be found in the appendix of the presentation, as well as in the slides and other information that's posted on Chevron.com. We're now ready to take your questions. We ask that you please limit yourself to one question, and we'll do our best to get all of your questions answered. Katie, please open the lines.
Thank you. If you have a question at this time, please press star one on your touch-tone telephone. To allow for questions from more participants, we ask you limit yourself to one question. If your question has been answered or you wish to remove yourself from the queue, please press star two. If you are listening on a speakerphone, we ask you please lift your handset before asking your question to provide optimum sound quality. Again, if you have a question, please press star one on your touch-tone telephone. Our first question comes from Neil Mehta with Goldman Sachs.
Yeah, thank you, Mike and Eimear, and welcome back, Janine. Mike, I would love your perspective on the current conflict in the Middle East, and if you could share how you think about this in the context of your 4-decade history in oil and gas, and how significant of a moment is this? What do you think the long-term implications are of the current conflict? And I know at the Analyst Day in November, we talked about a flat nominal $70 Brent as a mid-cycle planning assumption, but does this event change the way you think about mid-cycle pricing?
Yeah, thank you, Neil. This is clearly a very significant disruption to the global energy system. It's a scenario that we've thought about. We've included in some of our planning exercises for many, many years. It's early, I think, to have firm conclusions about how the energy system will change in the long term. I do think there will be changes, but I think we have to see how things play out over the coming weeks, hopefully not longer than that, as this comes to some sort of a resolution and the energy system begins to be reconstituted in a way that can reach some new equilibrium. I think that new equilibrium will look different than what we've known before, but I'm not sure I could argue with a lot of confidence that I could describe exactly what that looks like. One thing you can expect from us is consistency. You will see capital and cost discipline no matter what. You will see us invest in highly competitive assets with scale and longevity no matter what. Assets that are low on the cost curve. You're going to see us invest to drive strong returns and free cash flow, maintain a strong balance sheet so we can create predictable and growing shareholder distributions. We've got great visibility through 2030. Eimear just reiterated our guidance for that, and we've got assets online now that deliver predictable, visible cash flow growth for the balance of this decade. And we've got a full hopper for beyond that. And so I think the things that Eimear talked about, consistency, discipline, the strength of our portfolio on the ground operating today are all things that will underpin our strategy to go forward. And, as we see how this is resolved and as we see, what the energy system begins to look like post the conflict, if we want to fine-tune that at all, we'll come back and talk to you about it. But I really think it's early for me to give you anything concrete other than to reiterate, I think, the things that you've seen out of us and that in my 44 years have stood us in good stead through unexpected events and cycles are characteristics that you should expect to endure. Thank you.
Thank you. We'll take our next question from Arun Jayaram with JP Morgan.
Yeah, good morning, and thanks for taking my question. Mike and Emer, it feels like one of the key themes from the print is the opportunity for Chevron to optimize, margins from the refining system, as well as your increased exposure to waterborne crudes post the Hess merger. And I'm looking at slide 4. I was wondering if you could help us think about the value capture opportunities and maybe the experience in 1Q, and how should we think about this integration, favorably impacting your go-forward earnings power?
Yeah, thanks, Arun. As part of the organizational changes that we made last year, we stood up a global enterprise optimization team. And they've really got the remit across all of the upstream and the downstream to be sure that we're getting maximum value out of the entire set of assets, and we're integrating where it makes sense. They've done a really nice job in the last quarter of keeping our system operating at high degrees of utilization, capturing good margins through volatility. Our portfolio provides options to move things around in times like this. Our refineries in Asia, which are all in various types of ventures, we expect those to run over 40% Chevron equity crude in the second quarter, much higher than under normal market conditions, and probably much higher than we'll see in some of the other refining assets in that region, because we have the ability to direct equity flows to those refineries at a time when access to crude is very important and very difficult. In the U.S., we're operating at over 50% equity crude throughput. Some refineries much higher than that. We've used the Jones Act waiver to move crudes from the Gulf Coast around to the West Coast. In Asia, in the first quarter, we ran CPC blend, we ran Mars, we ran WTI, all in our GS Caltex refinery in South Korea. And just to give you a point of reference, I used to run our downstream business, and in those days, we were about 15% equity crude into our refining system and 85% crudes from the market. As I said, we expect to be over 40% in Asia, north of 50, and much higher than that in some refineries in the U.S. And so that's a significant change from our history. And at a time when margins are likely to move back and forth across that value chain, they may be in the upstream, they may be in the downstream, we're going to be able to capture those with a much higher degree of confidence. And importantly, in a world that is getting very tight on products, we're going to keep our assets very full and be able to provide a significant supply into markets that dearly need it. And so we're not going to quantify the value that we're capturing, but I think you'll see it flow through in the numbers, and it is meaningful, and I think that's continuing already into the second quarter and likely beyond. Thank you.
Thank you. We'll take our next question from Devin McDermott with Morgan Stanley.
Hey, good morning. Thanks for taking my question. So, Emer, in your prepared remarks, you highlighted Chevron's long-standing and consistent financial priorities. I wanted to build on that a bit and get your latest thinking on capital allocation at higher prices, and particularly that balance between shareholder returns, building cash, and growth. You did leave the buyback range unchanged quarter over quarter, which I think makes a lot of sense, and I commend you for not being pro-cyclical on the buyback, but maybe just talk through the strategy there. And then on the growth spending side, what would you need to see to shift spending, maybe add some capital in the Permian and move away from the plateau back toward growth in that asset? So 2 parts of the question, but would love to hear your thoughts.
Yeah, thanks, Devin. Well, overall, it comes back to staying consistent with our 4 financial priorities and being really disciplined on that through volatility. So that's why today we're not changing any of our capital allocation framework. We're not changing any of our ranges, and we're happy with where we are and with all of those. So just maybe to recap, first and foremost, growing the dividend, and this year we've grown it for the 39th consecutive year. 2, investing in the business in the most capital efficient way. Our budget is $18 to $19 billion for the year. We're on track with that budget. Our capital performance is really, really strong. With that capital, we're going to grow 7 to 10% production this year, so we're reconfirming that growth. The third is the balance sheet. The balance sheet is in great health. The balance sheet will get stronger with higher cash generation. And then fourth is the buyback, staying within 2.5 to 3 billion for the range. So with only 8 weeks into the conflict, as Mike said, it's too early to have a different view on the fundamental outlook around price. It's too early to see or have a view of whether that is structurally changing. And so when it comes to capital allocation, we're comfortable with where we are, and we're staying consistent and disciplined. Thanks, Devin.
Thank you. We'll take our next question from Doug Leggett with Wolfe Research.
Well, thank you. Good morning, everyone. Mike and Eimear, I wonder if I could follow up on Devin's question and maybe just ask for a little bit more color around two specific assets. Obviously, you had some changes in Venezuela, Mike.
Hi, Mouse.
But my understanding is that's been running essentially as recycling.
I'm doing
cash flow
onboarding.
to
Need to
maintain
mute
the
this,
business
folks.
and obviously pay
Be
down
right
your
back.
legacy,
I'm onboarding Discord.
money you owed debt and so on. But I'm wondering, are you at a point now where the fiscal terms have changed, the security situation is different, basically the broad picture for Venezuela, where you would be prepared to incrementally put more capital? And I guess I'd ask the same question of the Permian, where, not so long ago you did have a growth story there, you stabilized it, but one could argue that in both of those areas, there might be a call for incremental oil production longer term, and you guys are in a pretty strong position to deploy capital if you did. So I guess it's a capital increase question, but it's also specific to those two assets.
Yeah. So, Doug, I guess what I would say, number one is, we are operating now, as I mentioned in my prepared remarks, with TCO greater than 1 million barrels a day, Permian solidly above 1 million barrels a day. The Australian LNG facilities running at full capacity, Gulf of America. I mean, all the big pistons in the engine are firing. And as we come into the second quarter, we've got tremendous momentum across the system. Production in the second quarter expected to be higher than production in the first quarter. Eimear reiterated 7 to 10% production growth guidance for the year. And so we've got strong growth in the business right now. And then we've got options, right? We've got a portfolio that presents us with options. I think Eimear said it pretty well in response to Devin. It's early into this conflict to be making big changes. We don't know how things will be resolved. You could build a scenario where things get resolved quickly, the strait reopens, and we get back into a market that's pretty well supplied. You can build another scenario that says this goes on and the market's tighter and it looks different on the other side of it. I don't know exactly how this will play out. So we're not going to make any rash or immediate changes to a system that's running at a high degree of capital efficiency today and operating efficiency. Really important to stay focused on reliability at a time like this and safety at a time like this. Specific to Venezuela, your understanding is right. We are still recycling cash flow. We still have debt to recover. We're obviously recovering at a faster rate in this kind of a price environment. And there are indicators of positive developments in the country, but there's still questions. And so the fiscal terms are not clear. There's ranges that they've indicated for tax, for royalties. There's still things that need to be addressed relative to dispute resolution, et cetera. And so we'll continue to operate in the mode we're in right now, which has yielded some growth over the past couple of years, and in fact yielded growth this year. But we need to see further progress before we would put more capital to work. We've got a lot of resource there, and we could grow it. In the Permian, I think Eimear mentioned that, and we're running the Permian to deliver strong free cash flow right now. We could hit the gas and begin to grow it again, but I don't know what the future looks like. And at this point, the value that we're seeing in improved asset reliability and reduced lost production to downtime, et cetera, is very real. And we get that because we are so focused on that. And a shift to quickly turn to more production growth might dilute that focus. And so, we'll update you over time if our view on these things changes. But for right now, I think it's really steady as she goes.
Thank you. Thank you. We'll take our next question from Steve Richardson with Evercore.
Hi, good morning. Thank you. Mike, I was wondering if you could talk a little bit about the exclusivity agreement with Microsoft on the power projects. Specifically, you've been at this for a while. No doubt you've learned some things, and it's been a bit of a journey getting to this place in terms of dealing with a different type of counterparty in a different industry. But also, could you just update us on time to clarity on contract and FID and all those good things?
Sure. So, it has been reported, I think we've confirmed that we're in an exclusive discussion with Microsoft right now. We're very pleased to be in those discussions with such a high-quality customer as Microsoft, and it's a company we know well. They've been a partner of ours for a long time. They're our primary cloud provider. They've been a key technology provider to us for many, many years, and we've got a deep and very good relationship with Microsoft. The project that we're advancing in West Texas is progressing well. We've submitted an air permit. We've secured not only the large turbines that we've talked about before, but also small block generation that's useful in early scale up and for some reliability. We've selected an EPC who's doing engineering work on that. We've agreed with a water provider, et cetera. So we're advancing the project with a lot of pace. We're beginning to take delivery on turbines this year. So, subject to definitive agreements, which we are in negotiations for, we will move towards FID later this year, and I think we'll deliver a project with speed, with scale, and that's differentiated. We'll remain disciplined on returns. The negotiations thus far look like we can find a place to meet where Microsoft's expectations on power prices and our expectations on return on investment can both be satisfied, and so like I say, we're very, very pleased. I think we'll probably have more to say about this on the next call, so stay tuned.
Thank you. We'll take our next question from Biraj Borkhataria with Royal Bank of Canada.
Hi there. Thanks for taking my question. Just wanted to follow up on Venezuela again, and this situation is obviously evolving quite quickly. At the start of the year, comments from the U.S. administration was essentially around oil companies not looking backwards at the receivables balance and looking forward. And then more recently, you today and some of your peers have been talking about the potential to get some of that paid back. So my question is really, how should we think about what is a reasonable time frame to assume for you to get your, couple $1 billion receivables balance back? Thank you.
Yeah, Biraj, we came into the year with, in round numbers, something closer to $1.5 billion dollars in a receivable. As I said, the rate at which that gets paid down is somewhat a function of the price, and we're receiving it faster this year than last year, obviously. I think we'll still carry some sort of a balance on that as we get to the end of this year, but much lower than where we are, and I think that would probably be fully paid off at some point in 2027. And subsequently, we would, update you on what the model would be for cash distributions going forward. And I think by the time we get to 2027, some of these open questions that I referred to in response to prior question relative to tax, royalty, contract terms, et cetera, are likely to be clarified, and we'll be able to give you more guidance on what we might do relative to capital investment. I think in any scenario, we remain the advantaged incumbent with people on the ground, with operations, with supply chains and contract resources, et cetera, that put us in a very good position to be a big player there, presuming that we see further progress.
Thank you. We'll take our next question from Sam Margolin with Wells Fargo.
Hey, good morning. Thank you for taking the question. Appreciate the view that, the visibility on the long term is very limited right now. But in the near term, there's some extraordinary things happening too. Localized shortages could start to become an issue in some of the places that you operate. In the next couple of months, depending on how the situation plays out. Chevron is exposed to these kind of idiosyncratic market events, volatility events, not just in regular operations, but also in the way you manage the supply chain. So I wonder, in the context of the timing effect in 1Q and the derivatives exposure, if anything's changed or if you're adjusting kind of your operating posture, within this highly volatile and extraordinary environment.
Yeah, Sam, it is an unusual environment. We've had experience working in unusual environments. In 2020, we saw kind of the inverse of this with the collapse of demand and excess supply. In 2022, we saw a version of this when the conflict in Ukraine began. And so, we've got a playbook to deal with these things. And you work on optimizing supply into these markets. You look at your financial exposures and counterparty circumstances and manage your risks there. The timing effects that were reported are the kinds of things you expect in a market like this and the kinds of things we've seen before. And so there's nothing unusual there. It was a big run-up in crude price over the course of the quarter, and things that normally don't really appear in our financials relative to derivatives become very evident in a market like that. In a market that goes the other way, you see those effects, and they go the other direction. And so I wouldn't overreact to any things in our numbers. We're very focused on supply into markets. And I mentioned, Asia, where there is clearly some of the nearest term stresses. We are working to keep our refineries in Asia running at, I would argue, probably the highest degree of utilization of anybody out there, because we can direct crude into those refineries. I gave an example of some of the crudes we've moved there. We can take crudes that would normally go into our U.S. refineries. We've got good substitutions for those that are available to us, and we can move other crudes we've got access to into Asia. And so we're very sensitive to trying to maintain supply into markets that are getting tight. We're very sensitive to the implications of this for customers, for counterparties, et cetera. And so, it's a dynamic situation, but we've got an organization that's very experienced in managing through these unpredictable and dynamic markets, and I'm very confident that we can manage those exposures very well.
Thank you. We'll take our next question from Betty Jiang with Barclays.
Good morning, Mike, Eimear. Thank you for taking my question. I want to ask about the TCO. In your prepared remarks, you actually mentioned that TCO is producing above 1 million barrel BOE per day, so that's above your nameplate capacity, and that's coming back from the disruptions that you saw in 1Q. Can you just speak to where that asset is performing, or what's driving that outperformance and maybe the debottlenecking opportunities? And then while we're on this topic, Mike, could you just give us an update on any how the renegotiation contract conversation is going? Thank you.
Sure, Betty. So first of all, TCO returned to full service in March following the repairs on the electrical system in February, and there were some adverse weather dynamics in the Black Sea in early March. We've got 2 out of the 3 single-point moorings available at CPC, the third one later this year. But with 2, we can handle full flow on the pipeline. So the pipeline's running full, the plant is running full. We've done a lot of maintenance work as a part of what's going on over here this last period of time, and we have the plant expected to be at near full availability for the remainder of this year. You mentioned the debottlenecking work that we did late in 2025. We've now got that running in its new configuration. Early performance has been very encouraging. I don't think we've got enough runtime yet to give you any specific guidance on that. We just need to see a little bit more operational data, but you can expect on the next call that we should give you an update on that. And at times like this, when the market signals are to run all of your assets as strongly as you possibly can, that's what's happening at TCO. We continue to see the benefits of a centralized control center in optimizing all the different generations of processing capability there and finding, I'll call it white space, or the opportunity to squeeze more production through those assets. It's a very complex optimization equation, and we've got new tools to do that in ways that we just never have before. And so I'm encouraged by what we're seeing thus far, and we'll give you more guidance next quarter. On the concession, we're making good progress there in the discussions. We're working closely with all partners in the venture and the Republic. There are technical and commercial teams that have been established, and all partners and government representatives are actively participating in that process. I think this has ensured that we keep everyone well aligned. We're proceeding on the same path, and it's moving along. So that's another one where I think at some point later this year we'll give you an update. This is a venture that's created enormous value for all stakeholders, whether it's the partners or the Republic over the last 33 years, and we're looking for a solution that will continue that history. Maybe final point on TCO overall, our guidance of $6 billion in free cash flow this year is unchanged, and that accounts for the operational issues that we saw in the first quarter. It accounts for what we're seeing today, and so the cash flow guidance at $6 billion at $70. So obviously at a higher price, if that's where we end up this year, we'll see stronger than that. Thanks, Betty.
We'll take our next question from Lucas Herrmann with BNP Paribas.
Yeah, thanks very much. Mike, Eimear, just touching on the LNG business briefly. I mean, the market's obviously tighter. I just wondered how much flex you've got across your portfolio to take advantage of, arbitrage or other opportunities that may be emerging, and how much how much production is not effectively committed. That was broadly it. Thank you.
Okay, thanks, Lucas. Yeah, so we ended last year with a portfolio that's about 16 million tons per year. Majority of that obviously is out of Australia, where we've got 40 TCF of resource and access to the strong and growing demand in Asia. Globally, our portfolio is about 80% long-term oil-linked contracts and about 20% exposed to the spot market. We like that over time. I think coming into this year with some of the expectations for length in the LNG market, people would have said that's a good place to be. When spot prices get very strong, obviously you say, well, I'd like to have more spot. We've got to look our way through those kinds of cycles, and our oil link contracts, which have a lag, don't show a lot of the current market environment in the first quarter. You can expect in subsequent quarters that you will see that flow through into the pricing on that 80% of our volume. And of course, the 20% that's sold under spot contracts is seeing the kinds of prices you've seen in the market recently. We just sold our first U.S.-based cargo, and that will grow by 2030 to another 4 million tons per annum. So that'll take us up to 20. That was sold into Europe on spot-based prices. We've got I mentioned earlier, we've got our portfolio running very, very strongly. Wheatstone and Gorgon at full rates, same in West Africa. So we're seeing the benefits of this, and the proportions are as I described.
Thank you. We will take our next question from Manav Gupta with UBS.
Good morning. I wanted to shift to chemicals. Globally, we are seeing naphtha crackers run dry because there's just not enough naphtha. Your portfolio is very U.S.-centric. There's a little bit out there with 15%, but mostly the capacity is in the U.S. And what we are hearing is that they're pushing for 20 cents per pound polyethylene price hike. So we ended fourth quarter at record low historic margins, but 2Q could be actually over mid-cycle. Can you talk a little bit about that and how you benefit from that?
Sure, Manav. So just to remind everybody, our exposure to petrochemicals is primarily through Chevron Phillips Chemical, also some through GS Caltex in Korea. And CP Chem is very much tilted towards ethane-based cracking here in North America and some in the Middle East. CP Chem is liquids cracking, but it's derived from its own refining flows, and so not reliant upon naphtha supply out of the Middle East. We've seen strong price moves, particularly in the olefins chain, which is where most of our exposure is. And those price moves, as I think you're probably aware, were predominantly here in the second quarter. So you don't see much of that in the first quarter. But chain margins have significantly improved from very low levels, as you mentioned, last year, to what now are chain margins that I would agree are likely better than mid-cycle chain margins. And I think you're going to see for people that have assets that are up and running in parts of the world where you're cracking advantaged feedstock, and certainly North America ethane would be described that way, you should see pretty good margin capture in those businesses, absolutely.
Thank you. We'll take our next question from Jean Ann Salisbury with Bank of America.
Hi, good morning. I wanted to get your latest thoughts on the Bakken, whether the initiatives to lower cost have given you more conviction that it's core in your portfolio, and whether the higher oil prices may have increased the interest from others in owning that asset. Thanks.
Sure. So, look, the Bakken assets have been running well. We've said that you should probably expect to see a couple of 100,000 barrels a day production there to plateau. First quarter was a little bit below that, primarily on some weather effects. We've brought down the rig count there. We're running 3 rigs now versus 4 previously. We're drilling longer laterals. We think we can sustain production that way and fully utilize existing infrastructure, drive strong free cash flow there. We're applying best practices from our portfolio, bringing some things in from Hess's practices like we did from Noble and PDC. This is a more liquids-weighted position in the shale, and so you're right. The strong liquids pricing makes it perform very, very well. And we were getting interest from others really since we've announced the deal, and certainly since we've closed the deal. We've had some incoming on that. We want to see a little bit more operating data and really understand the asset. As I mentioned before, we underestimated the quality of the DJ when we acquired Noble. And thankfully we didn't sell it quickly. And here we want to be sure we fully appreciate the value that we've got in the Bakken. I'll give you an example of one of the things we'll be doing. We're testing advanced chemicals to improve recovery in the Bakken today. Things we've been doing in the Permian and in the DJ. Early response looks pretty good. And so to the extent we've got ways we can improve the recovery and the value in that asset and maybe do some things that aren't available to others, we ought to be able to drive more value out of that than a buyer potentially could. And so performing very well, really pleased with it. And we're in no hurry to do anything other than continue to improve it. And in due course, like every other asset in the portfolio, we ask questions about how does it fit for the long term. But it's a little premature for us to be asking that question today.
Thank you. We'll take our next question from James West with Melius Research.
Hey, good morning, Mike, Eimear, and Janine. I wanted to dig in a little bit on your Eastern Mediterranean assets. It seems to me that the region, given the conflict near that region, that those assets are much more valuable at this point. And so as we think about Leviathan, Tamar, which you operate, and then Aphrodite, which I know you're not an operator, but you're obviously heavily involved there, how you're thinking about those assets going forward, because there's a lot of natural gas that needs to get to a lot of places in the region.
Come on, mate, wake up.
Security purposes
bloody hell.
And others.
Some bloody energy into your question.
Yeah. So, broadly speaking, James, I would agree with you. We have liked these assets from the get-go. That's why we're investing in expanding production at both Tamar and Leviathan, making good progress on those projects with some ramp up this year of another 600 million cubic feet per day of production on a 100% basis, a longer-term expansion of the Leviathan underway. We took FID on that in January, and are excited about that. And of course, we've begun feed work at Aphrodite. So this is a high-quality, nice, clean, biogenic gas. The demand for the gas in the region continues to grow, and supply reliability everywhere in the world now is, obviously a priority. And so the markets that we're feeding are growing, and the quality of the resource is very high. The quality of the assets, just a shout out back to Noble. Those continue to impress us as we look at the expansions with the way they were engineered and designed. And, we view the Eastern Med as an area with some growth potential. We've got exploration activity there, and it's you can think of it as a big gas hub with a lot of resource that has been discovered and more still to be discovered. And so
they need to kick
we're
up their
pleased with our
arse.
position there, and you can expect us to continue to pursue
have some
exploration
bloody energy,
and
for God's sake.
development opportunities over time.
You're talking to the CEO of Chevron.
Thank you.
And it's, what's going on?
We will take our next question from Bob Brackett with
Wake up!
Bernstein Research.
Good morning. You mentioned that Chevron, of course, has a playbook to deal with supply shocks. Governments around the world also dust off playbooks during supply shocks. Can you talk to what sort of government policies around the world that are helpful during a supply shock and which are perhaps unhelpful?
Yeah, you're right, Bob. There are playbooks all across the spectrum, and there are policies that are helpful in responding to a circumstance like this, and there are those that are not. Broadly speaking, we've got a supply challenge in the world. So policies that encourage more supply, that enable supply, that facilitate the ease of supply are the ones that are helpful. And I'll give you some examples. Releases of strategic reserves. Clearly, that puts oil into the market that wouldn't otherwise be there. That's a good policy move. In the U.S., we've seen the waiver of the Jones Act. That allows us to use ships that otherwise couldn't trade in these markets to move supplies from where they exist to where they're desperately needed. That's a good move. We've seen moves to relax specifications, which take a government-imposed constraint on what product can move to what market and enable you to move products that are needed and otherwise would not be able to do so. So those are the kinds we've seen in the U.S. Another one we've seen is the use of the Defense Production Act to enable some offshore California production to come into service and get into the market. And we're working with the operator of that asset to get it to our El Segundo refinery to meet local needs. California is the state where the supply pinch is being felt first, and I would say most acutely, and it's flowed through all the way to the street. And so there are a number of actions that have been taken that I think have been very positive in terms of creating supply and flexibility in the system to get that supply where it's needed. The actions that can be unhelpful are price caps, which do not allow the signal to use energy efficiently flow through into the economy, and they send a signal that can discourage the creation of supplies into markets that need them, well intended to buffer the impact of this on consumers and economies. But what it does is it distorts the normal behavior of the market. Export bans can do the same thing. They can constrain supplies that would otherwise flow into the market to the places that need them most, and make the situation worse. And then, of course, the one that a number of governments have gone to historically are some sort of taxes on profits that are generated during periods like this. The history of those taxes is they don't generate nearly as much revenue as they're initially advertised to do, and what they do is they send unhelpful questions about future investments, and so they can slow the supply response not in the immediate term, but out into the medium term, and create circumstances which create vulnerabilities out into the future. And so we're engaged with governments around the world to discuss these policies, to encourage those that really do help respond to the situation, and to caution people about policies that may not help. One thing that a company like ours with a large, diverse portfolio has is we're not overly exposed to a potential bad policy decision in any particular market because we have such a broad footprint. a more narrow footprint or one that's more concentrated in some of these areas could be more vulnerable to those effects. Thanks, Bob.
We will take our next question from Philip Jungwirth with BMO.
Thanks. Lot going on in the world right now, but wanted to ask about U.S. climate litigation, just because that's been an overhang for the industry for a while. We might get some clarity here with the Supreme Court now taking up the issue with the Colorado case, but how much do you think this could settle the question around state versus federal jurisdiction and just advance the whole climate debate in the U.S.?
Yeah, we're not a party to that litigation, Phil, so I can't comment too specifically about it, but we are party to another case that was just heard by the Supreme Court and concluded that a case that had been heard in state court really should be removed to federal court. And I won't get into the rationale behind that. You may or may not be familiar with it, but the principles are somewhat analogous, that this is a matter for federal courts to decide in our view. And in fact, it's truly a matter for elected officials to decide and establish climate policies that appropriately reflect the sentiment of the public and the interests of the nation. And that cities, counties, states are not the appropriate place for climate policy to be established, nor for climate issues to be subject to litigation. And so we're hopeful that the case that does make it to the Supreme Court provides some clarity. At the federal court level, we've seen kind of mixed views come out, and so this is a matter that I think really would benefit from some clarity that emerges from the highest court in the land, and more to follow. Thanks for the question, Phil.
We will take our next question from Nitin Kumar with Mizuho.
Hey, good morning, Mike and Emer. Thanks for taking my question. Back in November, you had given us a little bit of an update on your exploration program, kind of setting up the company beyond 2030. I included some country potential opportunities into new countries. Given the
coming up
events that
straight
have
after
here
this,
in the last 8 weeks,
we have
any
our
change to the
Discord
pecking
event,
order of those
and then we're back
priorities,
in half an hour
anything that you're
with
prosecuting a
our
little bit faster to
recession
get that oil to the
looming,
market?
why I sold another $200,000 today, moving to
I
SGov,
would say it really
and looking
hasn't
at
changed.
XRP
I mean,
and
exploration is a
Bitcoin. That
longer
comes up
cycle activity.
right after this.
We've got a portfolio that's diverse. I think that's valuable as you look at the circumstances right now. We do have some opportunities in the Middle East region, but we certainly have a number of opportunities we're highly interested in that are outside of the Middle East. And the reality that the world needs this energy supply and will need it long into the future means that we need to continue to look for resource around the world. We're pleased with the portfolio that we've built up. We're pleased with some of the new talent that has joined the company. We've got a different model under which we're making decisions now. We're using new technologies to try to improve both the cycle time and the success of our exploration program. So you can expect to see those things continue. We've increased our financial commitment to it as well, and so more to follow. But I think this is a discussion that will occur over the next number of years. And to the kind of earlier comments, if we're not going to change our activity levels in the Permian, for instance, in response to the last few weeks of disruption, certainly that's a place where you do have shorter term handles you could pull. Something like exploration, which is longer cycle, really doesn't get affected by this in the short term. Thank you.
We will take our next question from Jason Gabelman with TD Cowen.
Yeah. Hey, thanks for taking my question. You've guided to your equity affiliate distributions being at about 70% of what the full year guide is by the end of 2Q. I'm assuming some of that is related to the higher oil price. Could you just talk
Thank
about
you for the super
relationship
chat, Diesel
between
Raider. Very
equity
funny.
distributions and the oil price is linear, and if you have a rule of thumb there to help the market kind of think about the potential upside as a result of what we're seeing in the market? Thanks.
Yeah, Jason, obviously, as Mike talked about, we're coming into the second quarter with a lot of really a strong momentum on our affiliates, starting with TCO back at full rates and testing, the upside of the capacity. CP Chem is also contributing, Angola LNG full. So those would be examples of just the tailwinds that we're seeing on the assets and the strong momentum that we have. So that's why we were able to, increase our affiliate distribution guidance, today. And so it's $2 billion more, over $2 billion more relative to the first quarter. It's because of the confidence that we have in the performance. Another thing I would mention is TCO has already changed, their distribution schedule. They're now giving us dividends monthly. We've already got the first one in the bank in April. So, those actions coupled with the operational momentum is why the guidance is raised. Look, obviously the guidance is at $60, and so there's a lot of upside. There's a lot of upside here, depending on how prices unfold. Thanks for the question.
Thank you. We will take our final question from Jeff Jay with Daniel Energy Partners.
Hi, everyone. I guess I had a kind of a follow-up to Bob Brackett's question, really about California specifically. I mean, there's been a lot written about its reliance on imports, its low inventory levels. And I guess wondering, as an operator of refineries in that state, have there been other relief valves? Has the Jones Act helped? Have there been other sort of operational changes that you've made to kind of make sure that market's adequately supplied?
Well, I think I've referred to one, and I guess both of them, the ability to bring this new production offshore from Sable onshore and make sure that's getting into the California market. I mean, that's California oil through a California pipeline to a California refinery to California customers, and that was not happening just a few months ago. Same thing with Jones Act. We can bring crude oil or products from the Gulf Coast that are needed in California. You've got some special specifications you have to hit, so maybe blend stocks that would come around. But yes, we are very sensitive to our customers in California and the circumstances there. I think you're well aware of what California's policies have delivered to the state, which is an oil industry that is in decline, whether that's upstream production or refining, where we've seen a couple of refineries shut down this year. That has constrained supply capability. And at a time when the world is feeling these constraints, California is reliant upon supplies from other parts of the world, which are maybe needed to keep their own economies going. And so it's a real dilemma for the state. We are doing everything we can to meet our supply obligations there, but it does point out the vulnerabilities that have been created in California as a result of decades of poor energy policy. Okay, Katie, it sounded like that was the last person in the queue. Is that correct?
That is correct. No additional questions in queue at this time.
Okay. I'd like to thank everyone for your time today. We appreciate your interest in Chevron and your participation on today's call. Please stay safe and healthy. Katie, back to you.
Thank you. This concludes Chevron's first quarter 2026 earnings conference call. You may now disconnect.
There we go. The Chevron earnings, very interesting there. Now we've got 3 minutes. We're going over in 3 minutes time to Discord. For our pro event, we do 2 stage events every day wherever possible for our pro Lucasade members, talking about my trades, what I'm buying, what I'm selling ahead of time and all the rest of it. I will tell you that I've beaten the market today. I've sold a lot. I'm not going to tell you what. I'm going to do that in Discord and Electrum right now. Electrum already have my trades, so does Discord, but we're now going to discuss it and get ready for the next big event. We have a big event in just a few minutes time. right, in fact, half an hour from now, straight after Discord, we have this. Why I sold. You'll be finding out what I was discussing with my team on Discord Pro in 2 minutes. In half an hour. Recession looming. I sold half my position. Looking at XRP and Bitcoin now. What comes next? I've moved my money into cash. SGov, that is, not cash itself. That would be silly. We're earning 3.55%. We're nearly $1 million now. We're 720 grand. We're protecting our money. Then remember, the aim is to get to $1 million. No more, no less. Target, focus, and deliver. So that's where we'll be in half an hour. It'll take you directly there. It's pinned to the top of this event. It'll take you directly to that in half an hour. I'm now going to go over to Discord. I look forward to seeing you all live in a minute on Discord. I've given you the link. You all have it anyway, but I'll see you back for that live event in half an hour here on the main channel, The Big Show, and getting ready for our next moves. All right, that's it from me. Thank you very much indeed. I hope you all enjoyed that. Learned a lot there. I've taken a lot of notes and shapes my portfolio. Tap the like button, consider subscribing. I'll see you on Discord in 1 minute from now, and everybody else back here on YouTube in half an hour. That's it from me. We've got our music show tonight. Friday night is music night on the music channel. The link is on the homepage of this channel. You'll find it. I'll see you there at 4 p.m. Central Time. Now it's time for Discord, back in half an hour for the next big event. This is a big one. Recession looming. That's it from me. Take care of yourselves and each other.